Good afternoon, and thank you for joining us for an MP webinar covering Work Opportunity Tax Credit, WOTC, eligibility, proven strategies, and best practices. I'm Katie Kreider, Marketing Specialist here at MP. For those of you joining us on a webinar for the first time, MP is a full-service human capital management company. We offer a complete suite of products and services to support organizations through the entire employee lifecycle, including HR, recruiting, payroll, benefits administration, time and attendance, and compliance assistance. We support our clients with cutting-edge technical solutions, as well as proactive, reliable service and a deep HR and payroll expertise. At MP, we are wired for HR and help our clients succeed by aligning their people strategy with their business goals. I'm excited to introduce your presenter for today's program, Paul Carelis. Paul has over a decade of experience in the HR consulting space, working with businesses of all sizes and industries. Paul and his team of certified HR professionals at MP assist clients with compliance, training, and full circle HR guidance and support. Just a few housekeeping issues before we get started here today. If you would like to submit a question during the program, please use the Q&A feature at the bottom of the screen. We will be sending out the recording of the webinar later today along with the slides. And with that, I'm going to hand the mic off to Paul.
Awesome. Thank you, Katie. Nice to speak with you again. I'm looking forward to diving into today's topic. I think it's going to be a good one. Not one that I believe we've covered in a webinar in the past. So with work opportunity tax credits, we'll talk about the history a little bit, but it's something that's been around for quite a while. Has had a decent amount of traction, but not a ton. But I think the hope and why we're talking about it today is that now that so many companies have been able to take advantage of different programs like the employee retention tax credit, PPP loans, and all of that to kind of get used to the process a little bit. This is kind of an evergreen, or at least evergreen for the next few years program that hopefully now businesses are used to going through the steps to claim credits, and will be another way to get some additional credits in the door. So first, before we get started, just a quick legal disclaimer. This presentation is coming from an HR best practices standpoint. Please don't construe anything in today's presentation as legal advice. So in terms of what we will cover today, we'll go over a brief history of work opportunity tax credit, as well as the current state of the program. We'll talk about the 10 eligibility categories that you may hire employees into that would result in a work opportunity tax credit for your organization. We'll go into some level of detail in terms of how to take advantage of the program. And throughout, we'll address some tips, tricks, and best practices. And then we'll also open it up for some question and answer. So as Katie mentioned, if you do have questions, feel free to use the Q&A function here within Zoom. We'll do our best to get to what we can today. In full honesty, I'm trying to reacclimate myself with WOTC. With all the ERTC and PPP we've done over the last 2 years, it's easy to get things confused and mixed up, but I think we have it all straight. But if there is a question that we aren't able to answer, along with the slides from today's presentation, that will go out to everybody. And this will especially be one that'll be useful because there are, when we talk about the specific categories of eligibility, it can get a little wordy and a little detailed. So we'll make sure everyone gets a copy of today's slides, and then whatever questions come in, we'll make sure that within a week or so we get all those answers out as well. All right, so let's dig in. So in terms of some numbers, WOTC was first created in 1996. It was part of a bill called the Small Business Protection Act, and it's always had an end date. So there have been a few renewals of the WOTC program. Most recently was in 2019, so it was set to expire in 2019, and at that time it was extended until 2025. So as of right now, as it stands, barring any further extensions of WOTC, It is currently authorized through December 31st, 2025. So it's going to be around for at least a few more years. There are 10 specific categories of qualified groups who qualify for WOTC, not meaning groups in employer types, but rather employee profiles that would qualify for WOTC. It all depends on who the person is you're hiring and if they fall into one of the eligibility groups. In terms of fiscal year 2021, there were over 2 million certifications issued to employers, meaning that they sent in the required certification paperwork that pertained to a new hire and did get those certified and approved as someone who will be eligible, pending some, the amount of hours they work and the amount of wages they earn. So over 2 million, which has been a fairly static number. It dipped a little bit, I think, in 2019 or 2020, but it's hovered around that 2 million mark for a while now. In terms of positions being filled, the most common type of position being certified has been office administrative support positions. But that being said, if you look at the data, there are people in all different types of roles, from blue collar to white collar to retail and hospitality, science, all of those things. So there's no one category of employment that's necessarily better than others. Looking at some kind of less official data, some folks estimate as many as 20% of new hires, and it can obviously vary by industry, but up to 20% of new hires may be WOTC eligible. So definitely something worth looking into at the very least. All right, so let's get into the minutia a little bit and those 10 categories of eligibility. All right, so the first of which, and this is probably the most lengthy and wordy, is a qualified veteran. So for a new hire to be considered eligible as a qualified veteran, they'd have to meet one of these bullet points, not all of them, just one. Either a member of a family receiving assistance under SNAP, EBT/food stamps, whatever, however you refer to it, for at least 3 months during the first 15 months of employment, or unemployed for a period of at least 4 weeks. Doesn't have to be a consecutive 4 weeks, but less than 6 months in the 1 year period prior to their hire date with you. Unemployed for at least 6 months, also doesn't have to be consecutive in the 1 year prior to hire. Could also be a disabled veteran who gets compensation because of that service-related disability when they're hired not more than a year after being discharged from duty. And then finally, a disabled veteran who is unemployed for at least 6 months in the previous year before hire. So if you do hire veterans, this would be the criteria for that eligibility category. The second category is an ex-felon. So for someone with a criminal record or a felony on their record to be eligible under WOTC, they would need to be hired by you within 1 year of either being convicted or being released from prison because of that felony. Next, and this is the most recently added category to the list of eligibility, qualified long-term unemployment recipients. So to qualify under this category, the worker would need to have been unemployed for at least 27 consecutive weeks at the time of hire. So over 6 months essentially, and received unemployment during at least some of that time period. Saw a lot of this obviously during the pandemic. Next is the designated community resident. So this one's a little bit up in the air right now. You've probably heard about empowerment zones and enterprise communities and things like that. So those are actual geographic locations where where you're hiring people that live within those spaces, that they're qualifying as a WOTC candidate. The problem is that when the WOTC came up for renewal in 2019, as I mentioned earlier, the empowerment zone definitions and guidelines also expired. So I believe, and it may vary state by state, some states may have this all squared away and others may still be determining it. But you'll want to check wherever you're hiring employees, especially if it was if they live somewhere that was formerly an empowerment zone, just to see if it is still classified as such. So there's been a little shifting in this. But for someone to qualify under this category, they need to be over 18 but under 40 and living within an empowerment zone, an enterprise community, a renewal community, and they need to continue living there after they start employment with you. So you can't go, say, travel out of state, go recruit a bunch of people from an empowerment zone far away and bring them over to your business and have them live there. They have to remain residents of that eligible area. Next category is vocational rehabilitation individual. So these are folks with physical or mental disabilities and referred through a specific program. So a state plan approved by the Rehabilitation Act of 1973, an employment network plan under the Ticket to Work program, or a program carried out by the Department of Veteran Affairs. So these are people that would be coming to you from an agency in most cases, and would probably already come with WOTC pre-certification paperwork completed. You just need to send it into your applicable state agency. The next is summer youth employee, and I think this is a big opportunity. And when you look at the data and the statistics, this is the least common used category for WOTC eligibility. And that time of year is just about upon us in a couple months. So good time to be talking about this and a good time to be keeping this front of mind. So for a employee to qualify as a summer youth employee, they need to be at least 16 but under 18. So it is a fairly limited window in terms of age eligibility, either on the date of hire or May 1st, whichever is later. They can only be employed between May 1st and September 15th. They cannot be employed prior. They cannot continue to be employed after September 15th. And they also do need to live in an empowerment zone, enterprise community, or renewal community. So somewhat understandable why this is the least commonly used category, but if there's ever a time to start exploring it, now is that time, because this is your window of eligibility here for these summer youth employees. Next category are SNAP recipients. SNAP is the Supplemental Nutrition Assistance Program. That's the federal term. Some states or some communities refer to it as food stamps. Others refer to it as the EBT program. All essentially the same. So if you hire someone who's at least 18 but under 40 and a member of a family that receives SNAP benefits either in the previous 6 months or at least 3 of the previous 5 months, then they would qualify under this category. Next is what's known as a qualified 4A recipient. So Title IV has to do with government assistance programs. So a qualified 4A recipient would be a member of a family who's receiving temporary assistance for needy families, or TANF, via the state where they reside, and they need to have been receiving those federal assistance benefits for a 9-month period sometime in the year and a half before they're hired by you. There is also the long-term family assistance recipient. So these folks have also received assistance under Title 4A for at least the last year and a half or 18 consecutive months, or 18 months since 97, and it has been more than 2 years since the end of their first 18-month period, or their welfare benefits have run out, and it hasn't been more than 2 years since those benefits ran out. Again, yes, I did see a question about the definitions. We will be again sending copies of these slides, which go into detail about those 10 factors and 10 possibilities for eligibility. So yes, let's talk about how to file next. Sorry, my audio went out for a second there. So the first thing you need to do is have the worker complete what's known as Form 8850. So this is the pre-certification notice. Timeliness is of the essence here. With this, it is required that this 8850 form be submitted within 28 days of hire. So important to note, unfortunately, unless it's someone that you've just hired within the last month, this isn't a program where you're going to be able to go back, like say with ERTC or something, and retroactively claim the credits for people that you hired, over the last couple of years. This is really a moving forward type tax credit program. So the employee would fill out 8850. That would signify that they may be a member of one of those 10 categories we just reviewed. There then would also need to be, in most cases, a Form 9061. So that goes in a little bit further detail. The employee can fill that out, or the employer can fill that out, or a designate. Just basically goes into a little bit more detail about the qualification. Might have to do with dates of unemployment or dates of receiving assistance, things like that. So the 9061 asks a few more detailed questions. So you need to collect those. The other forms that are sometimes used, if someone's coming to you from an agency, so it's like a state or federal workforce development program or the Department of Veteran Affairs, and they kind of come with that 8850 in hand, then you'd use Form 9062 instead. It's a little bit different. And then finally, if someone is qualifying due to being under long-term unemployment, there's a separate certification form that you use. So you always use the 8850 and then one of those 3 other forms, depending on the situation. In most cases, it's going to be 9061. So then what you need to do is gather those 2 forms and send those to the state agency that it pertains to. So these do, even though the IRS oversees the program and it's a credit on federal income taxes and federal employment and payroll taxes, it does all get handled at the state level. So the certification forms would go to your applicable state agency. Next, you need to start measuring their employment, their hours, their pay, and calculate accordingly. So to qualify for any level of credit, in most cases, an employee needs to work at least 120 hours in their first year of employment with you. To really maximize the credit, they're going to need to work 400 hours in that first year. For people on TANF that Title 4A eligibility, they need to work the full 400 hours. Anything less than that would not qualify those folks, but most other categories do qualify if they work at least 120 hours. For most of the groups, the credit amounts to 40% of up to $6,000 in wages if they have surpassed the 400-hour mark, which means a credit of $2,400 per eligible employee. The credit percentage drops down to 25% for employees who work more than 120 hours but fail to hit that 400-hour mark. There is one category in particular that is more lucrative in terms of credit amount. So some of those veteran groups, the qualified veterans and disabled veterans, for certain categories of those, depending on their eligibility, in special cases, that $6,000 wage base quadruples to a $24,000 wage base. So that is the highest category and the highest amount of credit you can get through WOTC. Those can be as high as $9,600 for a specifically qualified veteran who is otherwise eligible. And then the third step is going ahead and claiming that credit. So the way that the credit is claimed is on a form 5884. So that goes alongside with your 3800, your annual tax filings, and it can offset your federal income taxes. Question that comes up often is, how does this work for tax exempt organizations, nonprofits? Their form is slightly different. It's a 5884C. And they are able to, for a tax exempt organization, they are only allowed to use this for hiring qualified veterans, and the credit would be against their employer Social Security tax. Whereas for-profit businesses, tax subject organizations, it goes against their income tax liabilities, on Form 3800. As well as the employer Social Security tax. It is important to note that unlike ERTC, where if your credits amount to $2 million and your tax liabilities are only $1 million, this is not a refundable credit like that. So you won't get a check in the mail for $2 million in that case. You can get it for offsetting what you did have for tax liabilities. It just cannot exceed that. But there are some special rules that we'll get into now. So skipping ahead a tiny bit, if you look on the very last bullet point, you are allowed to carry over unused WOTC credits. You can either take them back retroactively 1 year, or you can carry them forward up to 20 years. So if you do luck out and have a large WOTC credit that it far exceeds your actual eligible tax liabilities, you do have the ability to keep rolling that forward up to 20 years. So please don't hesitate to explore the program, even if you don't have a great deal of tax liabilities, because you can continue to roll it forward and forward and forward. In terms of best practices, the best idea is to just start baking this into your onboarding process. So if you don't have that paperwork as part of your onboarding now, this is a great time to start doing it. And the more user-friendly you can make it, the better. So if you do use some sort of electronic onboarding, we tend to see much higher success rates and engagement rates with employees when they're able to fill this in electronically. And then also, aid to show the talent pool what you're doing, and also to help with your recruitment efforts. Definitely leverage your efforts in this area. Say, where as part of WOTC, where whatever groups you wish to target, we encourage veterans to apply. We encourage long-term unemployed to apply, whatever it may be. If you tuned into our webinar a few weeks ago, you probably heard folks talking about some of the more original and unique and open-minded recruiting strategies that are out there now, including hiring people with criminal records, having a more open recruiting and hiring strategy. This plays perfectly into something like that. So take advantage. Similarly, if you're looking for help and struggling, your ads aren't getting a lot of hits, you're not getting a lot of applicants when you put something out there, seek out within your community the American Job Centers, the state workforce agencies, sometimes even cities will have an equivalent to that. They likely have a pretty healthy talent pool, and a lot of times they'll specialize in folks who may qualify under some of these programs. So at the very least, it doesn't hurt to ask, and it could turn into a great recruitment funnel for you as a business. I know I said it before, but those state agencies aren't joking when we talk about the 28-day time frame. I have had experience with employers who kind of just collected all the forms and didn't send them in until after the fact, way later on, and it didn't go well for them. So you do want to make sure that you have this as a pretty well disciplined process as part of your overall onboarding, that as you're collecting this data, you're getting the forms completed and you're sending those off and not waiting, because they do check the hire date, and if it's been more than 28 days, they very well could and will probably reject the certification for that worker. Other best practices not listed here. Certainly recommend keeping all of your paperwork straight. The IRS is staffing up with, once they get through their mountain of tax returns and amendments that they're working on at the moment, they do keep saying that they're hiring more in enforcement and inspection. So you just want to make sure that you're keeping good records, keeping all of your paperwork, all your certification forms, all of that. Just keep them handy, keep them safe, keep them secure, so that should you be reviewed or audited or anything like that, you've got the paper trail to support your credits. For those of you who would be interested, if you do use MP for payroll and are on the iSolve platform, and especially if you utilize our electronic onboarding feature, we do have a WOTC service that we offer. We'll send along some information included with our copies of the slides and the other content that we send out later today. So that is a benefit we provide, where we help streamline many aspects of the WOTC process through our electronic onboarding platform and help out with the filings and all of that. So if you are interested, please let us know. We'd be happy to talk about that further. Looks like we do have a few questions. All right, so a lot of this information is not part of the normal hiring process, right? Yeah, so most of these questions, in most cases, you do not want to ask before you've made an offer to hire somebody. So you don't want to ask them about disabilities or economic type questions about whether or not they receive food stamps or federal assistance or anything like that. Great point. Is there a form after hiring we can get our employees to fill out to see if they qualify? So yes, that would be Form 8850. What we can do, and I'll work with Katie in terms of the communication after today's session, is we can include a copy of that 8850 so you can see what it looks like. It is technically a voluntary form. I see that's another question that came in. So you don't necessarily want to force employees to fill it out if they're not comfortable, but you can utilize it, you can use it, you can ask the questions. There's a pretty lengthy Equal Employment Opportunity Commission, EEOC, opinion letter about the validity and the compliance piece of using Form 8850 and asking those questions, and they're fairly adamant that it doesn't violate the EEOC rules. It does not violate the ADA rules. I will say the one caveat to that is if someone does say check off that they're a disabled veteran or have a physical disability or a mental disability, you generally don't want to press and pry further than that, at least at this juncture. It's okay to ask the questions for the purposes of the Form 8850, but you don't want to cross the line in any way. Does the 8850 need to be completed before a job offer? And can it be sent and completed electronically? So yes, it can be done electronically. That's the way we do it as part of our service. We bake it into the onboarding document. So while they're filling out their W-4 and their I-9 and all that other new hire paperwork, they can fill out that 8850 as well. You can do it at the time of offer. I wouldn't generally recommend it unless it's coming from an agency, obviously. I wouldn't recommend doing it prior to making a hiring decision on somebody. Again, just because you don't want it to seem that it's clouding your judgment one way or the other, or being used to pry for sensitive information and influencing your hiring decision in any way. Is there a website that lists the empowerment zones? Yes, I believe so. I will make sure we send a link to that if it is still current. As I said, I know there's been a lot of back and forth about certifying all the empowerment zones. So to the extent that that's completed, we'll send out a link for that. Will payroll records be sufficient records for reimbursement, or does that information need to be loaded into government forms? Yeah, generally the payroll record should be, the wage information should be sufficient, and it will correspond with tax forms you're already submitting anyway. I will look into, it says, had a question here about Form 8850 and the timing of it. I will take a look at that and see if changes have been made to the 8850 since I last reviewed, and I will include my opinion on that in our message out. All right. So I believe those are all the questions that we got today. Great ones. Thank you very much. And I will get back to everyone, especially about the timing of the 8850. But that concludes the session for today. Sorry if it was briefer than you had expected. It was a lot of information. I didn't want to overkill it too much, but I do thank you for joining us, and I'll hand things back over to Katie.
Thank you, Paul. Lots of valuable information on the work opportunity tax credit. Any questions that were not able to be answered, again, we'll receive a response via email within 5 to 7 business days. The MP HR team is here to guide your organization on any HR compliance issues. If you would like to learn more about how we can assist your organization, please visit our website to set up a short 15-minute call. Be sure to join us next week on the same day and time for our webinar on the Great Resignation, Key Steps to Reduce Employer Liability. Visit our website to register and to see the full calendar of upcoming events and available resources. We will be sending out a recording of today's webinar with the presentation slides this afternoon. Thank you for joining us and have a terrific day.